Alright, what's up, guys? Hope everyone's having a great day. It's been a moment since I've uploaded a new informational video, so I thought while I'm still using this free trial software that I would make one. Today we're basically just going to talk about the mental aspect of trading, what makes a good trader, what it takes to be a good trader, things of that nature, what to look for. Basically, the way I look at it is the thing that makes a good trader is someone who can separate emotions and numbers. You know, there's stock trading works, like I said, in numbers, and everything that happens to the stock happens at certain numbers. Unless the stock is having some type of crazy news happening to it or something, either very good or bad, some type of news. But just when we're talking about strict technical analysis and strict technical setups, mostly the chart and the stock will play to certain numbers. So when I say so people may be wondering how stock trading is mental. Well, stock trading is mental because we're using real money and we're putting real money on the line. And when you start to lose money, you start to get really scared. And when you start to make money, you start to get really excited. And those are two very dangerous and two very overpowering emotions that can get in the way of rational decision making. And the way I always look at it is if you're, for example, one way I always look at it is if you're a good golfer, you're going to make a very good stock trader because golfers, golf is a very emotionally driven game. If you're nervous, if you get upset, it can cause you to make bad decisions, and that's the same thing that happens with stock trading. If you start to go down a whole bunch of money, and let's just say, for example, we'll just use a really easy example. So we're looking at this chart right here, and we can see, let's say you bought in right here at the market open on 11/20/17. So let's say you bought here. So let's say I don't know, you had 10 grand put in here and you bought in at 160 anticipating the price to go to 170. Well, let's say, right when you buy here, you start to see a drop and you start to, lose money. And, by the time you get to midday, you're already down 4% on your $10,000 position. So, you're down, I'm not sure what the math would be or how much you'd be down in position, but if you're using $1,000 position, you'd be down, oh, what is it? You'd be down $40, so you'd be down $400 on a $10,000 position, I believe. I don't know. Don't quote me on my math. I'm just using this for an example. But either way, you're going to be down money. You're going to be down 4% of your investment, which is a basic, or it's, a decent amount to be down. You don't want to be down 4% on, your position. So, you're down 4% on this position. You're down, a substantial amount of money. And, you start to get scared because, you're down. You don't know if it's going to go any lower or not. And then you start to see this consolidation pattern here at 155. That's to be expected. Like I said, round numbers. Notice how we got to 160, went to 155. And then, this is where the emotion starts playing and where you start to come out of this consolidation and you start to downtrend, pretty, that's a decent downtrend right there. And, you come all the way down here, you get to the 150 area and, you start to get scared. At this point, you're down 6%, which, you're down 6%, that's a pretty big loss right there, and that's only in one day. You're at 6% down, so, you're down 600 or whatever the amount would be. And, that's when you start to really get scared, and that's when you start to get frustrated, and that's when you start to get hard on yourself and say, oh, this is a bad trade I made. I'm down 6%. I don't want to continue to go down anymore. And, this is where you start to get into the realm of, are you going to sell out the position because you're down so much, or are you going to do the realistic thing and recognize that, you're at 150, and you're down 6%, but you know you are at that round 150 number, which historically is a very solid number to stick at. So you're deciding if you want to sell or not. Uh, and the emotional thing to do is going to be to sell because you're disappointed. The trade went down south for you. You think that you made a bad trade, when in reality the trade is not over to a smart investor. Uh, and then this is where learning to set your stop losses comes in. Like I said, we get up to 160, it goes to 162, but it can't break. But you'll see, here's 160 right here, and here's 162. You'll notice how it goes 2 cents above the 160 area, but fails. So you can see how that happens to the upside. But then when we come down here, you can see the same thing. You can see it comes to 150, and then it comes down to 148. It comes down to 148 here and as well here. But like you can see, it broke through 160, went to 162, but it was a fake out, and the price ended up coming back down. You have the same thing happening down here. You have the price come down to 150, break to 148, but then it's right back up. So basically, this is where emotion and logic comes into the trading game. You got 2 cents above your 160 mark, then you get 2 cents below your 150 mark. And like I said, that's where setting a stop loss also comes to handy. You need to know how to set your stop losses. You never want to set them at the round numbers. You always want to leave a little bit of wiggle room in for your stop losses, because there are going to be people that have their stop losses set at this 150 number because they're saying bad stop losses, and they're executing a sell, which continues the selling pressure, resulting in a further dip of the price. So as we can see, we come down 150, and then drip down to 148. So a good position is, how I think of it is, if I was to be playing this, I'd probably set the stop loss at 157. If you set it at 146, you might as well already play the 145 resistant mark. So I'd put, if you're playing the 145, I'd probably put my stop loss at 143. Like I said, you want to give it a little bit of extra room because, as you can see, it dips down, but it holds pretty steady in the end. Same here, it rises above, but it holds pretty steady and it stays within that area. So like I said, this is where emotion really comes in, because obviously if you look, you're down 6% in one day, but if you had if you held this position for just an additional 4 days, not even in 3 days, you'd only be down less than 1% if you just, did the thing and held it for 3%, and even not if that, if you wanted to just wait one day, you're down 3% here. The thing is, use the numbers, trade off the numbers. You went to 160, okay, you saw you didn't break 160, you come back down to 150, okay, you're still in that time frame, that bracket that you want to be in. And then another way you can eliminate, stupid things like this happening is, I wouldn't buy in, at 160. That's just not a smart play. Let's get a little more. It does appear that the price has been consolidating between 158 and 164. But, if anything, the place you should be looking to buy is right here in the 150s, not the 160s. This isn't a typical chart, as where, we have this huge consolidation pattern now happening here between the 149 and, kind of the 170 area. At this point, I'd say on this chart, a break of 170 would be pretty bullish to move higher. Let's go ahead and take a look at some of the plays we're in currently, and I'll break down the thinking behind the plays that we're in. So, alright, so the first one we're in, alright, I'm not going to call this the perfect trade. This is more so a trade that I just think has potential and looks good on a chart. Except the only problem is this stock has not been out for more than a year. So the year time span looks kind of choppy and it doesn't look good. Oh, that's the wrong indicator. So we're going to pull up the swing indicator, which has the MACD and the RSI. as well as we're going to do this so you can see the chart better, and we're going to put it into 180 days. Alright, so we put it into 180 days right here. You can see how the chart looks a lot better than this very choppy. I mean, it doesn't look too bad now. It's starting to extend out now, but it still kind of looks funny. But looking at the 1 day, um, let's take a look at what we got. We have the loading up of the MACD as well as the RSI starting to finally head above, it's headed towards the 50 mark. If we zoom in here, we can, it's kind of hard to see, but we can see we broke past the previous high at 42 on the RSI. And then the crossover here on the MACD is a very good indication. If we go to the 180 days, we'll see, the same thing. We have the RSI approaching 50. The MACD is already crossed over here, but you can see it continue to head higher, and the separation of the lines as well as the green bars starting to get bigger. The play here is mainly the break of 13. Let's go back to the 180 day. We'll remove the studies since we don't need to look at those anymore. Alright, so we can see here the play is the break of 13, which has held as, pretty good support. I will admit, I did buy in at 12.97, which was early. Probably, not, what I want to be teaching and not what I want other people to be doing, but, I'm hoping for, a pretty big rally off of the opening bell on Monday due to the slow trading on Fridays. It was only a half day, so that's why that. But yeah, mainly the main play here is a break of 13. I'll be setting a fairly tight stop loss, probably right here, as we can see the, the 1260 area has been holding, as you got resistance here, another resistance here, and then, resistance along with consolidation here. As we can see down here, the support is mainly at 1213. That's where this chart was bouncing and consolidating before it decided to make the step up. As we can see right here, 13 is the floor. We did touch it on the day, but we continued down. So that's the Snapchat play. The other play we're looking at right now is a play we've been in for a while. This is Shop. Again, this is not a textbook play that I would advise people to learn off of, but we can still take the thinking behind it. As you can see, it's been a very choppy time for this stock with lots of ups and downs. As we can see, we came in here, made the $90-ish support. Then we come up here, we got the 95 support, and as you can see, big consolidation right here at the 100. Unfortunately, as you can see, we made a pretty aggressive move on this day, and this is when I caught the play. No, I think I caught the next day actually, but I missed the main move. The main move was to try buying in at 100. As you can see, big move on this day that I missed the stock moving at 100. And then I ended up buying in on this day right here at 105, the break of 105, round number. We're up to 110. Now this is typically where you should sell a stock. We're still currently holding it, but the only reason we're still holding it is because I believe that personally, this could be, if we can break this 110 here, and we can, stay above it nicely. I see this making a run to 120 and then hopefully beyond. As we can see, the RSI is heading for 70, so I'm hoping for a breakout there, as well as the MACD is crossing over and continuing its strength. If we are to look at something like the simple moving averages, we'll see that we're above every simple moving average, which is also very bullish. And we'll look at the Bollinger Bands really quick. As you can see, they just condensed and now they're starting to expand again. Right here, the momentum SMA does look a little bearish, and a cross below would be bearish. So, like I said, 110 is going to be the stop on this stock. But other than that, a very nice gain so far. What are we up? Wow, shit. Let's see. We're in at one. Let's see. So we're currently up about 5%. So that's been a nice trade so far. And the last trade is. The last one we are in currently is CNC. I'm going to be honest, these are not the most disciplined trades, and I'm very embarrassed to be having to show these ones, but the reason they are the trades at the moment is because of the chart pattern they have set up and the potential they do have. As we can see down here, the MACD is very loaded up and it looks poised for a big run as well as a cross of the 50 on the RSI. Obviously, we're going to have to break 58 right here. That was the previous high, and 62. If we do that, we could expect a big move up, and then as well as if it can break 100, that would also be a big move. If we remove these studies, we will see that there is a big ceiling right here, and that would actually indicate the breakout of the stock. I actually did buy in, I think, the upper 97s. As you can see, the stock kind of fake out, breaked out me. And this is Friday, which I said was a half day of trading because of Thanksgiving. As we can see down here, very low volumes. That's why I didn't really make much moves. And this was the day before Thanksgiving, so days like that when traders know the markets are going to close tend to be slower. But obviously, we had a pretty big price movement, so I'm anticipating this honestly to go up to 100. It's about a 2% move at the moment, but if it could break through 100, it would be a very big move. And as we can see, the stock has almost doubled on the year, so that's why I anticipate a big move past 100 because of the momentum of this stock and how it continues to go up after every earnings. If we just want to take some points of, being a smart trader, you can see how well this thing's held 90. You had a big dip by here, as well as the run up to, previous resistance. It doesn't quite make it to 100, so, you got to use previous resistance. Can't break through. As you can see, it comes down here, all the way down here for some panic. I'm not sure why that happened, but you can see the buyback of 90 would be strong. We can see the comeback down here, back to 90. Back up, back down to 90. You can see how 90 is, the big area, and, you shouldn't be, too scared to, of it's going to break below 90 a bit. Obviously, these two dips right here would have been pretty scary, and you more than likely would have been stopped out unless you're willing to take, an additional 4%. I don't recommend anyone do that, but, as you can see, here 89 held on this candle right here. So, you just got to make sure, you're using some logic in your stop loss, and, you're not just freaking out because you're down a bunch of money and you just want to sell out because you don't want to lose more. You got to look at where you are in the stock and how you are going to react and what you are going to do, because there have been multiple plays. I can't bring them up now because I can't think of them, but where I've been stopped out because basically I set a bad stop loss, or there's been multiple times where, I freaked out and sold a stock and then had to go up immediately after, and I sold at a stupid point where I shouldn't have, and, I ended up getting bit in the ass, That's where, you always have to be smart, and, if you make one dumb play, it could cost you hundreds of dollars, and you just have to realize that. So, that's really all I have to say for this this video, but if you guys have any requests or anything else you'd like to hear about or learn about, just let me know, and you guys know that I will make the quality of the video to the best of my ability. Also saying that, I just want to remind everyone I'm not a pro trader, and I do not claim to be a pro trader. I am just relaying the information and knowledge that I have gained over the past 2 years from doing trading. Like I said, I'm not a millionaire. I'm not, some high up guy that, you should take everything that I say 100%. You should learn off me. You should, get the basics from me, and then, if you get that and if you feel you need more information, you should go to a pro trader. But like I said, I take all the knowledge I know and I try to condense it down to y'all to the best of my ability to avoid y'all from having to do the amount of research that I've had to do.